Good morning, everybody. Welcome, and thank you for joining us for today's webinar. This is another session in our Guided by Corner webinar series, where we focus on giving boards and community leaders practical real-world insight that they can use to make better decisions. My name is Andrew Bacha. I'm the Director of Client Services for Corner Property Management. And again, I appreciate you all taking time out of your schedules to be with us today. Today's topic is contracts, coverage, and consequences. It's one of the most critical areas in community management. Most issues don't come from the unexpected. They come from what was clearly defined or properly structured at the outset. Today, we're going to cover how contracts should be structured, where boards are most exposed, and how contract language and insurance must align. Today, we're joined by two professionals who deal with these issues every day. Hubert Cutolo, a partner at Cutolo Barrows, is an experienced community association attorney focused on contract negotiation, dispute resolution, and risk mitigation. He brings practical, real-world legal guidance that boards can apply immediately. We also have with us Ryan Weiner, Senior Vice President at Brown & Brown. Ryan specializes in insurance and risk management for community associations. He focuses on how coverage actually responds in real-world claims and helps identify gaps before they become problems. Little housekeeping, and before we start, if you have any questions during the session, please put them into the Q&A. If you look at the bottom of your Zoom screen, there is a Q&A section where you can put any questions in, and we're going to address them in a Q&A at the end. But I will say, if something seems relevant and timely, I will ask the presenters to take a second to address the question. But again, please just put your questions into Q&A. We'll make sure we answer them as much as possible. And with that, thank you again for joining us. I'm going to turn it over to Hubert. Thanks, Hubert.
Andy, thank you so much for the introduction. We appreciate being here today. Hopefully, we can give everybody a little bit of an education and try to keep it simple and succinct. We're gonna cover the easier portion today, as Ryan will cover most of the insurance after. So, generally speaking, we want to just talk to the board about the importance of having all of your vendors and the different liability under contract. So remember, the board is really going to start. You start the process before it ever goes to council to prepare that contract. So you're going to identify, the board will identify any of the services and projects that need to be undertaken. And that includes all of the day-to-day stuff. So almost everyone has landscaping. You're going to look at what you want that landscaper to do, how many times you want them to cut, what you want them to do with the landscaping, et cetera. And you could do that for every single service. It's not just the landscaping, but obviously the snow removal, the pool management, the cleaning on the clubhouse. So you really, as a board, you want to identify the wishes, wants, and needs of the community. So this is the first step in the process. What I would recommend, obviously, there's two different types of contracts that we're going to talk to today. One is your regular services that you're receiving. So that's trash removal, landscaping, snow removal. And then the other type, which is a little bit more complex, is the large capital construction projects. So when I speak about both of these, they're going to be completely separate because one creates a lot more potential liability, and we're going to make certain recommendations of things that should be taken on for the large capital projects. And then obviously for the regular day-to-day services, there are different concerns. So the first thing is the large capital projects, we'll kind of get that out of the way. Generally speaking, we'd recommend that you have an engineer on those projects. So they will create specifications that specify the exact way and manner in which that scope of work needs to be done, which we'll cover that a little bit later on what you need to do for those. The other ones on the day-to-day services that we get, we would recommend that the board put together with the assistance of management a request for proposal. So any of the wishes that you want and any of the needs, you consult with the manager, you put together a list, and then you can use that as the RFP to go out to actual bid. Because remember, when you're having bid, you always want to have a competitive bidding process. So you have 3 or 4 vendors. You want to obviously check references, but you want to make sure that they're bidding apples to apples. A lot of what we see as the attorneys when they come back with a proposal and say, hey, we want, we've selected this vendor, not with Corner, but with other management companies, we've seen that you have open-ended terms. So they'll come back and they'll say, well, here's the vendor, like it's a time and materials. But you can't have a contract that way because the vendor is the one making all of the different determinations. So it's very important that you, in conjunction with your manager, come up with an exact scope of work. And when you bid that process, that everyone is bidding apples to apples. So I will tell you what you want to do is obviously when you determine the scope of the project, you want to make sure that all of that is clearly documented in the agreement. If you have a clearly documented agreement that's protective of the association, you'll not only avoid disputes with your vendors, but you'll avoid any type of litigation. And I will tell you, the cost on preparing a contract that's very protective of the association is very small, given the potential liability or the potential disputes that ultimately you can have as an association with a vendor. So once you have the apples, obviously you get your apples to apples vendors, you can negotiate. So you'll get all of your bids as a board. You look at that with your manager. You may have some questions for the attorney. You may not, prior to obviously giving that to the attorney. And then you can negotiate a little bit. So certainly you can negotiate either terms or services or prices. And then once you have that all negotiated in a submitted proposal, then generally at that point, you'll get it over to the council and request that the council prepare an agreement. I will tell you, there are a lot of key aspects that should be always included in the agreements. These include, you always want a with or without cause termination for your day-to-day vendors. What we have seen is a lot of people will try to lock the association into contracts for very long term, 4, 5 years, and there won't be a termination clause with or without cause. If there is a termination clause, it's a with cause termination, and then they define with cause very, in a very broad way. So we always recommend, for instance, your attorneys. Attorneys are required under the professional rules of conduct. If you don't like your attorney, you can get rid of us at any time, or any attorney at any time. They can't lock you in. It's very personal, like a doctor or an attorney. If you want someone else, you go out and get that other person. We always recommend, especially with the landscapers, snow removal, and your day-to-day vendors, to have a with or without cause termination clause. That way, if you don't like the services they're rendering, they cannot make lost profits, no claims against you as ultimately as an association, and you can terminate them at any point. Another real important issue to have is you want to have, and Ryan is going to cover this later, you want to always have insurance and indemnification provisions. So they agree, any of your vendors agree to defend and indemnify you as an association if there are any damages from the services that they render. Now, that's very important. Also, I think we're the first council to start doing it. And now I believe, hopefully, most of the other council in the industry do it as well. But we also included that our contract should provide that the vendor's insurance is primary and that the association's insurance is secondary and non-contributory. So what does that mean in plain English and plain language? What that means is, let's use a snow removal example. Snow removal, obviously, there are a lot of people that are slipping, will have slip and falls, and then ultimately will institute suit against the association and against the snow vendor. In this instance, if they have been called out to give service and they are alleging that they are somehow negligent, the snow vendor, which caused an injury, we would make a demand on the snow vendor's insurance to defend and indemnify us as an additional insured, stating that their insurance is primary. Now, you still have to place our insurance on notice, but hopefully you can avoid the claim being filed under our insurance, and our insurance company and the agent, especially in this case, Ryan, will help you through that process and try to shift that liability to the other contractor. All right. So there's also a number of different issues within the contracts that you want to include as well. Never have a time and materials agreement. because you do never want to give your contractor an open checkbook. It's one of the number one ways to have large disputes when we come in on contracts we haven't drafted is they don't have clearly defined terms. So if you say, let's say we have, Joe Blow comes in with the back of a truck and you're like, look, we need drainage done in this area. We're going to do a time and materials basis. So we're going to now I'll charge you, $50 a ton for dirt to be moved, and you're going to be charged, $80 an hour. Now, the problem with that contract is the contractor wouldn't be in violation of the contract if he comes in and spends 1,000 hours, or alleges he or she spends 1,000 hours, and then ultimately said that they moved 20 tons. So they now give us a bill for $45,000 or whatever it is that we don't feel is reasonable, and it's not clearly defined and it's not in breach of agreement. So we always like to have very clearly defined terms as to payment. One of the other real important things, and especially for the large contracts or any of the regular day-to-day contracts, is we always want to make sure that we're never paid above and beyond the services that have been rendered. So you always want to make sure that we are rendering progress payments for work that has been performed. In large construction projects, we also recommend keeping a contingency of a retainage of at least 10%. So you wait until the end, and then ultimately after the engineer inspects the work and may ensure that it's been done properly, then you would ultimately release that. I will tell you, in the larger construction projects, and we'll cover those for a little bit, you always want to have, we always recommend generally having an engineer do the specifications. We also recommend having the engineer inspect to make sure that it's done properly according to specification and that we obtain any warranties. Let me give you a for instance. On the roofs, like when we look at it, we've come in so many times as council where they use some little local vendor who put on the roof, who allegedly gave them the best price, and 5 years later or 3 years later, it's leaking like a sieve. And in some instances, you had to replace the whole roof. I've never seen an issue, or actually, I shouldn't say that. I saw an issue once when you get a warranty through one of like the manufacturers, like a GAF or a Timberline, where $1 billion manufacturer is the one issuing that warranty. They send out representatives, they inspect your roof, and then they give you the warranty. It's not through the contractor, it's through the actual manufacturer, who's $1 billion company. In all of the ones that we've seen that occur, I've seen one leak that was 100% taken care of. The manufacturer came back out and ultimately took care of that. So it's just one of the instances. Now, I will tell you, in that instance, you're generally paying about 3% more, which sometimes you can negotiate down. But there, you're making sure that you're having reputable, that you have specifications prepared by the engineer, and you're forgetting about this roof for 25 years. In most instances, it's full replacement to, I think, 15 years. And then after that, they prorate the useful life of the roof. So we don't want to be penny wise and dollar foolish at the outset. We want to make sure that you're doing it exactly the right way. I will tell you also, the contract negotiations before you're getting to your actual contract, this is all privileged. So all of the negotiations that you're having with the board and with the vendors are privileged. The only thing you ultimately need to do is vote once you've approved that contract and approved the vendor in open session, and then you can allow your attorney to negotiate the terms of that. I will tell you, the price of preparing these contracts is very small. If you get involved in one dispute or a lawsuit, it becomes a lot more costly for the association. So we'd always recommend you can avoid almost all of these contractual disputes by at least putting it on your form and having your counsel do it. Most importantly, if you take anything out of today, it's the with or without cause termination. You also want an integration clause saying that everything is included in the agreement and that there were no other agreements outside of those issues. You also want a choice of law and choice of forum clause, which says it's going to be in New York. Obviously, joint drafting provision saying that you both drafted it, because any ambiguities would be construed against the drafter. But any contract, I mean, the contract's always very clear, very specific, very focused. And you always want to anticipate, because the things in the contract should be able to anticipate and avoid litigation. For instance, a lot of things, like if you're sued, most of the contracts that we prepare, you can terminate for any reason. But if there's a dispute under the contract, you can have that the prevailing party would be entitled to attorney's fees and costs, or at least the association. So that dissuades, obviously, any lawsuits, because the last thing you want to be involved with is a lawsuit. You also want to, when you do and you ultimately approve it, I always recommend that my clients send it back to me, because I will save it. We scan it, we keep it in the system, and you have it there in perpetuity. You would have it signed. Generally, you want to have each page initialed, and any specifications that are attached and the insurance documentation from each vendor should be there as well. Kind of a side note, you want to make sure that each vendor has not only adequate insurance that's naming both the association and the managing agent as additional insured, because remember, almost every managing agent contract that you have signed as a board, you are required to defend and indemnify the management company for anything other than gross negligence and willful misconduct. And that is standard, because obviously for all of the slip and falls, the management companies would have 500 lawsuits. It'd be impossible to run their business if we didn't insure them. Of course, if they steal or they did something wrong, you as an association would ultimately be able to file suit against them. So you always want to make sure that you have that insurance documentation. Also, at the end of the year, all of your vendors are required to have workers' comp. The associations will sometimes do, association insurance company will do workers' comp audits to make sure that everyone has that workers' comp. So you want to make sure that that's being done from every vendor that comes onto the property, has a written contract, has the insurance naming you as an additional insured, and then obviously has workers' comp insurance, which everyone is required to have under the law in the state of New Jersey. Some of the contractual provisions, any confidentiality provisions, which is not typically necessary unless it's something on a large construction project. It should deal with, obviously, termination of contract, which is the one we really highlighted for you today. Any type of liability, you'd never, ever, ever want to agree to defend and indemnify a vendor. I have seen these that it is complete madness on some of these snow removal where they've slipped through things where the contractor didn't look at it. You will never defend and indemnify a vendor. In order to get our work, they have to defend and indemnify us. Please, please always make sure that that's the case. If there's one thing, it's the termination provision and the indemnification provision. Two most important ones. Make sure we're looking at them and make sure we're covered. What happens with default? If there's a default, you should, as the association, have the right to terminate. You should have the right to repair the work or take any action, and then ultimately recover any of those damages from the vendor. In addition, for the large construction projects, we always put in liquidated damages in time of the essence, so that if they don't complete, if the vendor doesn't complete the work, especially with roofs or decks or large capital project, within a certain period of time, that we can assess liquidated damages, which means if you give them 100 days to do it and they don't get it done in that 100 days, and there's no reasonable reason for an extension that the engineer hasn't approved, you can charge them $500 a day in liquidated damages. I will tell you, very rarely do we have to assess those, but it ensures that the work is done in a timely manner and that you have a mechanism by which to compel that vendor to come back and perform that work, which is really important. Also, any disputes on how it should be handled in the contract, arbitration, mediation, or litigation. I will tell you, I used to like arbitration. I'm not a fan anymore, just because it's a little too arbitrary and it's become very cost prohibitive. The arbitrators are charging $500-600 an hour. You typically in the court what you need to. So I don't generally recommend that. But I will tell you, very few of our contracts that we have prepared ever would end up in litigation, because they're very favorable to the association and protective of the association. So I would certainly recommend that you do that, and ensure that we have all of the necessary legal all of the necessary vendors under contract. I will tell you too, small liability or small amount does not mean a small liability. So you really have to use your judgment as a board to make sure that you know when to use counsel to prepare an agreement, especially for legal agreements. Be very, very careful if you're signing an agreement for the contractor. Those proposals are very, very, very much in favor of the contractors. So you want to be very careful in signing anything like that to make sure that it's not locking you into long-term contracts and really onerous terms. So please just be careful with that. When we've come in as counsel, that's where we'll see major problems that ultimately we can run into. There's also a bunch of legal requirements. After you have the contract, you'll get counsel. Counsel will prepare the contract. You'll get it back to the board. Generally, the board reviews. The board will approve that contract, say, yes, this looks good. And then the manager will get over to the vendor. In most instances, I'd say 95% of the instances, maybe not on some of the larger contracts, the vendor will just sign, return it. Occasionally, we will get proposed revisions to the agreement. Generally, counsel will look at that, advise the board on how they should proceed, and then ultimately you'll get a final contract that is approved. I will tell you, you are legally required under Radburn now to vote in open session. You should be giving notice of the meetings at least 7 days before, and on the agenda, your vendors on who you're approving, you should vote to approve that contract in open session. Please do that. Because I will tell you, when you have a unit owner who purports that they are aggrieved by some decision that you undertook, that's the first thing that they start to look at, and they start to complain, well, you didn't approve the contract in open session. So let's follow the law. It's required under the law. Make sure that the board is taking the vote. In that vote, remember, you're going to say, and it's more of a self-serving statement, but you're telling exactly what you did. We went out, we negotiated the terms, we came up with an RFP, we had a competitive bidding process, and the board made a decision to retain ABC Contracting because we felt they rendered the most cost-effective services for that amount. We had counsel review the contract, and we're voting to approve that agreement. Second the motion, and then take a vote. But again, self-serving, telling you, it should be a self-serving statement, telling the community all of the steps that you took to make sure that you're protecting the association and got the best price for the best services. I would obviously, and this is done in conjunction with your management, we would do all the due diligence, make sure that who's ever doing the work is not generally. My rule is I eliminate the highest, I eliminate the lowest, and it's somewhere in the middle. Make sure they've done work for associations, make sure that they have the capacity. I would talk to references and make sure and maybe go to the site, especially with the larger vendors. I'm not talking about the guy changing the widgets or doing something minor, but at least for the larger projects, it'll save us a lot of aggravation in the long run. So most of that we're protected. I will just state on some of the larger projects, remember, you always want to do like pre-construction meetings, who's responsible for the permits, what you're doing, who's running that project. I will tell you, calendar all of the significant dates and develop an implementation plan. Very important. Like I would work in conjunction, and let's use just the roofs as an example. You want to know, like the people want to know when their roof is going to be taken off, or when their siding is going to be taken off, or when their deck is going to be taken off. I would have someone closely monitoring that. You should over communicate. Transparency, transparency, transparency. So I would get letters out to everybody, tell them what the inconvenience would be, if there's going to be, if parking has to change. That generally speaking, the more you communicate, the better, especially if it's a contract that we are, that council has prepared. I mean, it's little things that you don't think of as a board, but as council, we start to realize too, like the roof, nails come off, they're taking out the roof. So now who's going to cover a flat tire if it happens? Check with the person. Hey, are you going around with a magnet at the end of the day and getting all of the different nails? Are you cleaning up at the end of every day? And then monitor that. So it's these little things that sometimes you don't think of. Of course, I'm sure your manager will, but these are the kind of things that you want to do ultimately in those contracts. So fulfillment of the contract, obviously addressing unit owner concerns. A lot of times on the large projects, who's going to be doing that? Is it, the contractor? Are they going to set up a special line? Who's going to communicate? Are you doing that in conjunction with? Because the board you're the volunteers doing this. This is not your professional job, but you're the one who are going to hear a lot of any of the angry complaints that are coming in in the middle of the night or earlier in the morning or late at night. So a good working relationship and setting all of those conditions is really important. I will tell you at the close or completion of the contract, especially for the larger construction contracts, just make sure any of the retainage payments, generally you want the engineer to look at that, give us the final inspection. If you're not using the engineer, you just have to take precautions and make sure that you're obtaining any warranties, especially from the manufacturers. If you're having like a roofing warranty or material manufacturer warranties, make sure that gets filed, put on notice with the manufacturer, and then you keep that closeout documentation for you. That is pretty much it. I tried to keep it very streamlined, Andy. Obviously, we can jump in on any other questions that anyone may have, but that's kind of our succinct little analysis on why boards should use contracts and some of the highlighted provisions that they should really concentrate on.
Fantastic. Thank you so much, Hubert. And I do have a quick question for you. This came in the chat. If our roof contractor said our roofs were guaranteed for 100-year life, is our community truly covered for that length of time?
He said 100 years?
100 years.
Well, who is covering that 100 years?
Yeah, it says the roof contractor. So I think I don't know if it's verbal or if it's written, but that's something, that's something to talk about the difference between the contractor and the manufacturer.
Yeah, Andy, look, you can have a somewhat, I guess, personal guarantee, but whether the contractor and the person will be around in 10, 20 years is unlikely. So with most of these warranties, I look very skeptically, and I encourage the boards to look very skeptically on it given by a contractor. So I like the warranty to be given by the contractor and a very large manufacturer, hopefully $1 billion one, because if you're looking at a GAF, that's not going anywhere. It's $1 billion company. So if they're giving you, and by the way, even if they had to file bankruptcy, a judge would tell them you have to honor these warranties. So I always recommend that clients go out and get it through the manufacturer and the contractor. That way, if the contractor goes bankrupt, they go out of business, I can go to the manufacturer to have them honor that warranty.
Awesome. Thanks, Hubert. That's great. Really appreciate it. And if there's one thing that we've learned from your session of this, clarity up front really does help to prevent issues later on. So thank you very much. We're now going to shift to the insurance section of this presentation. And again, please, if you have any questions, drop them in the Q&A. Roy, we have your question. We're going to get to that at the end. Absolutely. Insurance, this is where a lot of boards believe that they're protected. But gaps often only happen when that claim arises. So insurance is more of a not if, but when type of thing. So now we're going to have Ryan walk through how coverage actually responds, what you as board members should be thinking about. So Ryan, I'm going to turn it over to you.
I appreciate it. And we are going to talk and kind of parallel a little bit of what Hubert said and talk about the contract piece. And we're going to end with some property insurance education that may be a little bit of a surprise to some of the board members that are attending. But association vendor contracts, every 3 years, there seems to be a cycle of what the hottest topics are from an underwriting perspective in the insurance business. And by far, contract language and indemnification in favor of the association it was becoming at the end of last year, it's the hottest topic amongst all of the community-specific insurers in our state. So yes, it's vital that your contracts are being reviewed and or created by your association counsel. But from an insurance perspective, there's really two pieces that are the most important. The first is obviously the insurance provisions and requirements that your vendor carry specific limits and name you additional insured and have those proper limits in the event that we need to bring them into the lawsuit. But the second is the verbiage itself, right? I mean, you can get a certificate of insurance. It's a piece of paper. But what does the contract actually say that protects us? And insurance underwriters now, for existing clients and when they write a new client, are making it a requirement that they see a copy of the snow removal contract, as well as the pool vendor contract if there's a pool exposure. And what they are looking for is strong indemnification wording in the association's favor. What they're really looking for is to make sure that you don't have reverse indemnification that is in the contractor's favor, because if that happens, they no longer will want to be your insurance company, and they can issue a 30-day cancellation and get off of it if you can't rectify that contract immediately. And this verbiage here, as an example, is worst case scenario, and it's becoming more and more common that this type of language is being uncovered on existing clients of certain carriers. So what this says, and it's blacked out, but I'll fill it in for you. It says, to the full extent permitted by law, the association will be responsible for claims for bodily injury and property damage occurring due to the contractor's negligent snow maintenance. So when the contractor's negligent and they're sued, the association's insurer is going to defend the contractor. That is clear reverse indemnification, the absolute opposite of what it needs to say. And later it goes on to say, to the fullest extent permitted by law, the client, which is the association, will defend, indemnify, and hold harmless the contractor and its employees and subcontractors. That couldn't be worse in terms of verbiage. If that's what your contract says, when your insurance company, and if your insurance company sees it, they're going to require that it be immediately changed to a more favorable verbiage. Now, there couldn't be any perfect timing to have this, more perfect timing to have this conversation, because barring some crazy scenario, our snow season is over. Now, you might still have to finish up, the next winter in your contract. And if that's the case and you have this verbiage, you need to do everything you can before the new snow season starts to get an addendum to your contract in the association's favor. But if your contract begins in September or October of 2026, and you have this verbiage and your contractor isn't willing to amend it, you're going to need to find a new contractor, unfortunately, because that's how important this has become. So that's the worst case scenario. The next slide is not the worst, but it's not too good. And that would basically say that at no time the contractor is liable for personal injury or damage caused by changing weather during or after, and that if management were to choose not to allow the contractor to perform services for any reason, that management agrees to defend and hold the contractor harmless. As Hubert referenced earlier, management, while acting as their role as managers, insured under the association's policy. So if management were to prevent them from performing services, then essentially management, per the association's policy, is going to defend the contractor. Now, that could be someone, usually what is it? It says, 2 inches an automatic trigger for snow. If it was 1 inch and management said, no, we don't need you, and there's injury, based on this verbiage, the association's indemnifying the contractor. That's no good. That's no good. So the next slide is going to be the insurance company's perfect scenario. Some contractors might agree to it. Some will agree to a slightly modified version that I'll show you on the next slide. But this basically says, and this is great, and this is what we would want in a perfect world, to the fullest extent permitted by law, the contractor will indemnify and hold harmless the association and their property manager from and against all claims, damages, and losses, not limited to attorney fees and so on. That's great. The next one is one that recently I saw actually on a corner account. I'm not sure what attorney, if it was Hubert or someone else that drafted it, but it's pretty perfect in our eyes. The contractor will defend, indemnify, and hold harmless corner the association, the governing board of association, and any member of the association due to any negligent or intentional acts by the contractor or their employees or agents. That's solid, and we would be happy, and so would the insurance company be happy to see that in your main contracts. So that is what we would aim for. Now, there's two pieces of the insurance puzzle when it comes to contracts. The first and the most important is the verbiage that we just talked about, the actual contract language. The second is obtaining and understanding what a certificate of insurance actually means and what it does. You probably have all seen them, but in the end, a certificate of insurance is not an insurance policy. It is just a piece of paper that shows that one insured has insurance, and the certificate holder is the person that that piece of paper was handed to. So a lot of times there's fraudulent certificates. A lot of times things cancel for non-payment of premium and we're not notified, and it gets ugly really fast at that point. But the key is, what can we do proactively before a job starts and before we sign a contract to prevent those disasters? And an obvious one is, the lowest likelihood of fraud happens with the most reputable contractors that we see in the industry, and your property management company is the one that's bringing these contractors to the table because they've worked with them in the past and they know that they do stellar work and they handle themselves professionally and ethically. Sometimes board members will go out on their own. If a new board member has personal interest in a friend or something that they want to bring in that has less skill or expertise in a certain arena, and bring that individual in, and bad things might happen as a result, which is why that suggestion of reputable contractors. Not to say that a friend's company can't be reputable, but some of the horror stories have been tied to that kind of decision making. In terms of limits, the minimum limit expected from the association's insurance company is that the vendors and contractors that you work with have at least $1 million of general liability insurance and $1 million of auto liability if they're using their vehicle in the course of the type of work that they're performing on your behalf. Anyone with less than $1 million, I mean, they don't even really sell policies at 500. You can get them in the non-standard marketplace. If you see a contractor with $500,000 of general liability, you should walk the other way really quickly. Verifying that the association is a named certificate holder and not the property manager, because a lot of times you'll see, a management company will reach out to a vendor and say, I need a certificate, and they're given the certificate, but it's not the association's name, or it's a different association that uses that same vendor. And there's a little box that you'll see that gives additional insured status to that certificate holder on that piece of paper. And if that's a different association than yours, you're technically not getting additional insured status through that vendor's policy. Creating a procedure to monitor. I mean, I don't know that if every board member on this call is on a board that's managed by Corner or not. If you're with a property that's managed by Corner, that process is as strong as it can be. They're not going to let a vendor on premises without a certificate. Certainly not going to pay them. And most of the top management companies in our state have a similar process involved. So I'm not completely concerned there. But if you're a self-managed community board member that's on here, just know that that's super important to have a process in place. And then when you're using one-off vendors for one-off projects, we're talking about today the main annual projects, and Hubert mentioned the main capital improvement projects. But a lot of times you might have someone come in and do a 2-hour job at the clubhouse to paint the railings out front, and maybe you don't go through that full process of having your attorney review or draft an entire contract for that 2-hour job. You should be at least running that through management to the insurance broker to just make sure that the certificate that vendor provided has accurate information and gives us proper protection. And if there is a contract, like a 1 or 2 sheeter, that we have some indemnification verbiage mixed in there that's going to protect us in the event that they cause injury or damage to our property.
Ryan, and just so that the board understands what the practical considerations are or practical consequences are, if you have one of these cross indemnification that we shouldn't have, right? Or you don't have the proper certificate of insurance. I mean, could that result? What would that result? Like if you looked at that, you're coming in to insure a client and you find that you have a reverse indemnification the opposite way, where they have vendors that don't have the proper. What would you do as an insurer?
Yeah. So as a broker for a prospective client, no
Yeah.
matter how much I want to help them, if they can't get that verbiage reversed, I can't even bring them a solution at that point.
All right. So
Because
you would
because
not be able to insure them, and that could result in very substantial increases because you signed a bad indemnification provision, correct?
absolutely. I
Right.
mean, even if it was a current client and carrier Greater New York, for instance, they
Yep.
are they're the leader in this kind of push. But again, for those board members that haven't had a bunch of insurance education, there are not 20 insurance companies in our state that are doing this.
Nope.
There are not 10, and there are not five strong ones competitively doing this. There are three that have the majority of the business, and those three have been doing this for 40 some years. It's a small pool, and this is not the time to lose your insurance company. So if you were to have signed a 3-year contract with a snow removal vendor and it's 6 months into that contract right now, and you have reverse indemnification and you can't get out of that contract and they won't put an amendment to it, and G&Y says in 30 days we're gone, they cancel your policy. I would need to replace it with one of the other potential options. Part of the replacement process is notifying the underwriter why you got canceled or non-renewed. Notifying them that it's because you have reverse indemnification is going to lead to them having the same exact response that your original insurance company had, which is thanks but no thanks. Call me when you get the reverse indemnification fixed, and you have verbiage in our favor that protects the association. So it's a massive um, uh, negative impact on a community for sure. So this certificate of insurance, it's real small, but just know that on the top left it says who the actual insured is, and in the bottom left it says who the certificate holder is. Again, the certificate holder is just the entity that this was given to and handed to, and it just mentioned who the insured, which is the contractor in our discussion, who they're insured by for each line of business: general liability, auto, property, workers' comp, and what the limits are to the right, and towards the middle, the policy number and the effective dates. But about midway down and about 30%, 40% in from the left-hand side, there are skinny columns that say additional insured. And in this case, there's a Y there, which references yes, it's very small. But that basically says that on that policy, which is general liability, is the certificate holder an additional insured? And that little Y says yes, which makes it real important that that entity listed as the certificate holder is the association. Because if it's a neighboring association that just happens to use the same vendor, and for ease of transaction, they just showed you that they have insurance, you're not getting additional insured status on that contractor's policy because you don't have a certificate that shows that you're the holder and that the yes box is checked for additional insured status. It sounds so basic and ridiculous, but yet so impactful, and it needs to be recognized. So that's certificates of insurance. Now onto the insurance piece. I'm going to transition from what the main topic of today's conversation was, the importance of contracts and the verbiage within those contracts as it relates to insurance, at least my piece, to the things that are happening in our industry from a deductible standpoint and also from a coverage standpoint, because it's super confusing to a rational thinker when we talk about property insurance for attached dwelling communities. I'm irrational, so I get it, but I want you all to understand how it works as well, okay? Because it's a little bit tricky. So in terms of deductibles, the insurance marketplace has been less than desirable since 2020, and insurance premiums have been on the rise dramatically post-COVID. Half of the reason why is because the values and replacement costs to rebuild frame communities, or any community really, has exponentially increased due to the cost of labor and materials, and that is the factor that your premiums are rated off of. It's the values of your buildings times your insurance rate. So that's the first piece. The second piece is the performance of the insurance industry overall and the rising cost of reinsurance. We pay for the losses of all. A community that has had no losses in 10 years, that's great. That doesn't mean you get a reduction in your insurance premium. That just means you're on the lower end of an increase if the market has shifted in a negative upswing way. So what have communities done to offset or to stop the bleeding? They've changed their deductible structure, and specifically as it relates to water damage scenarios. The most common claim for property insurance in a community is going to be interior water damage, anything from ice damming, which is popular in the past 2 months, to hot water heaters bursting, washing machine hoses, refrigeration lines, someone overflowing their tub, and we're going to get into some of those examples in a few minutes here. But water damage is often on a per unit basis, meaning that if multiple units are impacted in the same loss, each of those units is subject to the water damage deductible. And I just have here as an example 10,000. That's pretty much the base level at this point. Most insurers are not issuing deductibles less than 10,000. Most communities have 10,000 and upward. So communities are proactively increasing their per unit water damage deductible to offset small losses inside of communities, inside of residential units, for two reasons. Number one, less frequency of losses means more attractive insurability, more carriers wanting us at a lower price. The second is higher water damage deductible leads to an immediate premium reduction as soon as you make that change. That's not why we're doing it, but you might save a couple $1,000s by going per unit water at 25,000 or something. And that's the bonus. The bonus is you get a couple $1,000s of savings today. The real benefit is minimizing small claims so that we don't have to get involved, doesn't hit our loss history, and it improves our insurability over the next few years. This does not mean that the unit owner or that the association is paying these deductibles out of pocket. It's just a shift from, and I'll give an example in a couple minutes, it's a shift from the association's policy paying first dollar to the unit owner's personal insurance paying until it reaches our deductible. So it puts more skin in the game for the unit owner and the unit owner's insurer, which is a good thing because a lot of times the unit owner's failure to maintain items in their unit is the creator of the damage that is caused. So we like when their policy pays for more when that kind of stuff happens. If you could just skip to the next slide. Okay, so water and ice damming on a per unit basis, it can be a single loss or multiple losses. Should more than one unit be damaged by the same occurrence, each of those units is subject to that deductible. This is key. And this is more for management, but as board members, I want you to understand this too. When someone is frantic on a Saturday and they have a water damage claim in their unit, and they might call a board member, they might call an emergency service line for a management company, and they are emotional. And we get that. We want to direct them to first call their personal insurance and to second, call a mitigation company. You can suggest one that you've used in the past. Management can suggest one that they feel comfortable with, but we want the unit owner to enter into contract with that water mitigation company. The reason why? We as an association do not want to be getting bills sent to us for the work that was performed, because if the damage is under the association's deductible and the association is holding those bills in the association's name, we won't have insurance proceeds to pay for those bills. We want the unit owner to be the one holding the bill, and their insurance is going to compensate them until our deductible is met. So that's always key, is to have the mitigation bill in the name of the unit owner, so have them deal with hiring them themselves. And if there's proceeds from the association's master policy, they'll be given to the owner, and any deficiency is picked up by their own personal insurance policy for interior damage. So that's how the water damage stuff works. And I think there's an example that I want to walk through here that has too. So You have a pipe burst in a wall and it impacts two different units. Maybe it's upstairs, downstairs, maybe it's left to right. And unit one, and there's a $10,000 per unit deductible for water damage in this example. Unit one sustains, $7,500 of damage, and unit two sustained 25,000. How would this be handled, right? So we put each of them go to their own personal insurance policy. Each of their personal insurance policies pays for any damage up to our 10,000 interior damage. Unit one doesn't get any proceeds from the association's policy because unit one has $7,500 worth of damage. There's a $10,000 deductible. They're going to get all $7,500 of their damage paid by their personal insurer, which is their HO6 policy that they purchased individually. Unit two is actually going to get proceeds from the association's policy in the amount of $15,000 because they have $25,000 in damage and we have a $10,000 deductible. $15,000 of it comes from our carrier through management into the unit owner's hands. They're short $10,000. Their $10,000 is getting paid by their personal HO6 policy, and they will be subject to, let's say, a $500 personal deductible. So the key here is the association is out of pocket zero. And we only have $15,000 in the form of a paid claim that shows on our loss history. The unit owner's personal insurance each paid $10,000 less their personal deductible of $500. That's in a perfect scenario how we want it to work. If both units had $7,500 in damage, we wouldn't even be submitting a claim to our insurance company. They'd both be getting their full claim addressed by their personal HO6. And now we've saved ourselves from having to get involved with an unnecessary small water damage claim. So that's a beautiful thing. And now my favorite topic, and the one that I can talk about every day and still not get to everyone to understand it completely, is that negligence doesn't matter. It just doesn't. Property insurance does not care about who caused the damage. It just doesn't. If I live next to you in a single family home and we're neighbors and my tree blows over and lands in your backyard and it crushes your pool house and it crushes your fence and my tree is now laying in your backyard, the cost to remove my tree from your backyard and the cost to repair your fence and your pool house is the responsibility of your insurance company because your items were damaged. The fact that it was my tree means absolutely nothing. Nothing. Because negligence does not come into play. There is no stupidity wording in an insurance policy. So what we might think was ridiculous that an upstairs unit owner may have done, that is not excluded in an association policy. So this first thing here, if you remember nothing from today, remember two things. Have your attorney review or write your contracts and make sure there's proper indemnification. That's the purpose of today's conversation. Please get off of this call understanding that that is vital. The second, when it comes to property insurance, is this. The property policy that pays for a loss is the sustainer of the loss, not the creator of the loss. The sustainer of the loss pays for it. Okay, this is not auto insurance where someone leaves a note on your car because they backed into it and now you're going to call them and their insurance is going to pay for your damage. That's not how it works in property insurance. So negligence and stupidity doesn't matter. And what I hear all the time is, Ryan, they have a hot water heater that burst and it caused damage in their unit. Why are we paying for this? This is what the board's saying. This is what the property manager might be saying. Why are we paying for this? It's in their unit. Why are we paying for this? It's their responsibility, or they created it. Their kid overflowed the tub. They overflowed their toilet. They left their sink running. They had an 18-year-old hot water heater. Why are we paying for this? We versus they needs to go out the window when it comes to property insurance, because this policy is not the policy of the association board or me or the manager. This is the policy of the unit owners that live in the community that pay for this policy through contribution of maintenance fees. Personal insurance and association insurance do not cover the same thing. So when there's a loss where it's a covered claim for damage inside of a unit, regardless of who caused that damage, if it's covered and over our deductible, we cannot prevent the unit owner from accessing the association's policy, which is actually their policy. They're the named insured as unit owners on that insurance. So please, if that were to happen, utilize your insurance professional. When they're telling you to submit the claim because the damage is excessive, submit the claim because those proceeds are intended to go to the unit owner through the association. And I don't know if there's questions about that. It's usually the hottest topic, the one that's most misunderstood. But yeah, when someone's hot water heater bursts and it causes damage in your unit and you want somebody else to pay for that, your first line of defense, unfortunately, is you have to go to your own insurance. If your own insurance decides to subrogate after the fact, that's up to them. But since your property was what was damaged, it's your insurance that's primarily responsible to pay.
Ryan, with the caveat, and we'll jump in because I think a lot of what, and you are 100% correct in everything you're saying, but what a lot of the clients have done is push that deductible up to 15, 25,000, given all of the unit owners notice and let them ensure that they have the insurance to cover that deductible. So what that does is and by the way, we also recommend doing an insurance deductible resolution that says if the loss was caused by an item defined as part of the unit, i.e. water heater, tub, things that you had mentioned, and it's under the deductible, the unit owner would be responsible, or the unit owner's insurance.
Absolutely.
The reason why we allocate like that, and it's so important, is we keep it off our loss run history. And if as a unit owner you get one claim, it doesn't change your premium that much. If we get three or four claims, even if they're smaller ones on our insurance, we could get dropped, we could get non-renewed, we could be going to surplus lines. So certainly you want to try to allocate those risks across. We 100% agree with what you're saying, but we look at insurance deductible resolution and maybe pushing that deductible up. Another little thing, little tidbit that everyone can take from today's presentation.
Absolutely. If I was given a prospect to fix their insurance scenario, and I had a choice between one that had one loss that was a $700,000 fire and another community that had 17 losses that were $30,000 or $12,000 each from water damage, I can easily place the community with one fire. The one that has frequency of the same loss that are all small is a problem, and higher deductibles for water damage on a per unit basis could drop a community from having 16 claims over 5 years or 3 years to having 4. And that's a massive, massive difference.
Great information, guys. Thank you so much. For everybody on, again, if you have a question, please drop it into the Q&A, and we're going to answer a couple of questions, take a couple minutes. Hubert, you got into the insurance deductible discussion, and I think that's really important because in my career, one of the biggest difficulties has been insurance and board understanding of it, and even resident and owner understanding of it. How can an association compel a unit owner to go to their HO6 carrier in the event of a loss when they're absolutely refusing to do so?
You can't really compel. You can instruct and usually have the association attorney send them a letter telling them that they're required to. I guess if you instituted suit, you also could get that information and file the claim yourself. And if you have that on file, Andy, you can also file the claim individually and put that person on notice. Notwithstanding, I will tell you, in most instances, from notification from counsel, the person will put them on notice. You always want to, a lot of the times we're seeing pushback now of people putting the carrier on notice, whether the individual unit owners or the association. You don't want to do that. If you have insurance available, you do not want to come out of pocket for these costs. So certainly when we see a loss as counsel and the manager contacts us, we're like, make sure everybody is put on notice, the unit owner's insurance and the association's insurance. Because quite frankly, a lot of the times the association insurance and the unit owner's insurance will subrogate between each other and then determine who's the responsible party ultimately after making us whole. I mean, that's the whole point of the insurance. We want to make it whole and keep the premiums down, which you can do through insurance deductibles resolution.
Which also highlights the importance of an association having on file records of individual unit owners' HO6 policies if they're able to do that.
If you are able to mandate that the unit owners maintain insurance, Andy, we would recommend doing it. I will tell you, most insurance companies, if I go out and have a mortgage as a unit owner, they will require them to have insurance. So the or the mortgage company will generally pay for that insurance. If you have in some of the active adult communities where you have people come in and pay cash, there's no mortgage company requiring that. So sometimes you won't have the insurance. I'd always recommend getting it. I mean, look, I'd never take the risk on $500 to $1,000. God forbid something happens, not only with my unit or my home, but if someone trips or gets hurt, there's a whole host of different issues that you want that insurance coverage for. I wouldn't recommend taking that risk, and hopefully you can encourage and mandate it if possible and allowed.
Great, thanks, Hubert. Ryan, a quick question for you because somebody asked: when you say a small claim, what numbers are you talking about? Or do you consider a $90,000 to $100,000 claim a small claim?
Oh, well, it depends what you're paying for insurance, right? So if you're a 500 unit community and you have a package premium of $300,000, you are supposed to have claims, right? You are supposed to have technically 40% of your premium is the break even point. It's actually 41, where the insurance company expected loss ratio right now is about 41%. If you're over that, you're a loss to them. If you're under that, you're a win, depending how far under that you become a really desired client. So, a large $300,000 premium account that has one loss for 90 grand at renewal, unless that loss was super unique and related to a building defect, that won't even come up in conversation with me and my underwriter when I'm negotiating the next year's premium. But a community that's $40,000-$50,000 in premium, you can have 1 year where you have that $90,000 loss, but now you have a loss ratio of almost 200%. You can't string together multiple years over 100% loss ratio and expect that you're going to continue that carrier relationship. But communities with hundreds of units are expected to have 3-4 losses a year, and we just hope that there's not a big pop in there. But if you're a community that has a $26,000 water loss and you're concerned, I don't care how big your community is, we're going to get by that no problem. Isolated incident like that, utilize your insurance, let it work the way it's supposed to work, and then let your broker do what they do for you at the negotiation table.
Great, thank you. We have a couple of questions still in the chat. We want to be sensitive to people's time, so we appreciate everybody joining today. And those questions that were left in the chat, I'm going to pose those questions to our panelists by email, and I will get back to you by email with the answers to those.
And Andy, real quickly, I do want to just respond because I've looked in the chat very quickly. Mm-hmm. With regard to one question that you have, there was a burst pipe in the unit above and the unit below was damaged. If that damage is over our deductible, that should be submitted to the association's insurance, and each individual carrier should be put on notice. What they seem to be describing as a bare wall, so any betterments in the units above the builder grade generally are covered by the unit owner's policy and personal possession. And one last point I will make. If you are getting the money as an association from the insurance carrier, and then paying that money out, you don't have to perform the repairs. Please make sure that you get a release before you pay those claims so that the unit owner cannot turn around and sue the association and the carrier. So if you're paying out monies that are coming from the insurer, and by the way, they can submit supplementals under the release or go after recoverable depreciation. I'll give you a standard release. Just make sure it gets done. So I just saw those questions. I figured Denise, I wanted to give you an answer on that so that you have all the relevant information.
It's a huge help. Thank you, Hubert.
Hubert's pretty good at this stuff. I gotta say. I mean, you got to juggle a lot of things, but you're not supposed to reel off the recoverable depreciation that smoothly because you've obviously been through this a couple million times.
Yes. Right. And by the way, for everybody else, it just means that after you perform the repairs, you can go back and the insurer pays out the recoverable depreciation. But that means the unit owner has to perform the repairs and provide evidence of it. So you should just put that in the release. The release should also provide that they have to perform the repairs as well. So it's an easy way to protect us. Again, we don't want to get sued again, especially if the insurance company is paying out those monies. You don't want to have the insurer pay for the damages and then we get sued subsequently after by the unit owner or someone else. So it's important to always use those releases. If you're using a management company that has familiarity or an agent like Ryan that's helping, obviously they're going to give you that information.
Great, thank you. So I want to thank both Hubert and Ryan, and thank all of you for attending today. This is the kind of insight that helps boards avoid problems before they happen. And I think if there's one takeaway, risk does not come from the unexpected. It comes from what wasn't clearly defined or aligned at the start. So it's so important to have your contracts reviewed, to maintain good vendor relationships, to look at your risk exposure, and really to rely on your professionals to help support you as volunteer board members in what you do on the day-to-day. Please be on the lookout for our next webinar, Bringing Communities to Life, Activating Amenities to Elevate Experience and Value. We'll be sending out an email shortly about this with invitations. We hope that everybody be willing to join us. So again, I want to thank everybody for their time today. Hope everybody is doing well. Ryan, Hubert, thank you so much for providing such valuable information. And we hope everybody has a great day. Thanks again.
You as well. All right. Have a good day.
Thank you, everyone.